And you've got to study and think about this money stuff through the lens of behavior modification. It's not a math problem.
Let's imagine a scenario. By the age of 50, Alex had a six-figure salary, a flashy sports car, and the latest tech gadgets. To his friends and neighbors, he appeared rich. But here's the shocker. By 60, Alex was buried in debt, struggling to keep up with bills, and on the brink of bankruptcy. Why? He fell victim to some critical financial mistakes. Now, let's be real. We all want wealth, security, and a comfortable life. But did you know that some everyday habits could be silently draining your wealth, setting you up for a future like Alex's? Today, inspired by the financial wisdom of Dave Ramsey, we're diving into 7 habits that might be secretly keeping you poor. If you want to avoid the financial quicksand and navigate your way to genuine financial success, you're in the right place. Habit number 1, living beyond your means, the silent wealth drainer. Let's begin with a staggering statistic that'll probably make your jaw drop. According to a recent study, a whopping 78% of US workers live paycheck to paycheck, regardless of their income. Yes, you heard that right. Whether you're making $30,000 or $300,000 annually, the trap is real, and it's called living beyond your means.
If you will live like no one else later, you can live and give like no one else.
All right, so what's this big trap? You get a pay raise or a bonus, and instead of saving or investing that extra cash, you instantly think of upgrading your phone, buying that designer outfit, or maybe even thinking about that shiny new car that caught your eye last week. Sound familiar? Well, you're not alone. But here's where things get messy. As you upscale your lifestyle, expenses surge. Suddenly, those monthly payments become a larger chunk of your income. And don't even get me started on the interest. If you're relying on credit for these upgrades, interest doesn't just add up, it multiplies. Before you realize it, that debt mountain is looming large, casting a shadow over your financial freedom. This isn't just about resisting the temptation of the latest gadgets or flashy brands. It's about a fundamental shift in perspective. It's about distinguishing between wants and needs. Do you want that new phone or do you need it? Do you want that high-end bag or could you just do with something less extravagant? The key takeaway? Start living within or even better, below your means. By being mindful of where every dollar goes and resisting the pull of instant gratification, you pave a way for a financially stable future. And trust me, the peace of mind that comes with financial security, that's priceless. Habit number 2, avoiding budgets, the invisible chain holding you back.
Get on a budget. A written plan. You have to do a budget on paper, on purpose, before the month begins, every month. If you work for a company called You Incorporated and you manage money for You Incorporated, the way you manage money.
A survey from the US Bank revealed that a staggering 60% of Americans don't maintain a budget. Now, you might think, well, I have a rough idea of my expenses. Isn't that enough? The short answer, no. Here's why. Imagine setting out on a cross-country road trip without a map, relying solely on vague directions. Sounds risky, doesn't it? That's exactly what you're doing to your finances by not budgeting. Now, I get it. The very term budget can sound tedious, restrictive, and downright boring. But in reality, it's quite the opposite. A budget doesn't have to confine you. It frees you. It's like giving every dollar a purpose, a mission. No more wondering where your money's disappeared by the end of the month. With a budget, you become the master of your finances, not the other way around. However, here's the key point. By not budgeting, not only are you possibly overspending, but you're also missing out on potential savings and investment opportunities. That little coffee you buy every morning or that subscription you forgot about, they all add up. And without a budget, these costs remain hidden, silently chipping at your wealth. Dave Ramsey, the financial guru, often says, a budget is telling your money where to go instead of wondering where it went. Wise words. It's high time we shift our perception of budgeting from a chore to a powerful financial tool. So, grab that pen, paper, or app and take control. Your future self will thank you. Number 3, ignoring debt, the financial ghost haunting your future.
Middle class struggles with credit cards, with student loans, with car payments, and with whole life insurance. And they give their money. The middle class ensures that they're never going to be anything but middle class by being in debt to credit card companies and car companies, and borrowing and using whole life policies, which are a complete ripoff.
Did you know that, as per the Federal Reserve, the average American carries about $92,727 in debt? From student loans to credit card bills, from mortgages to personal loans, debt seems to have intertwined itself with the modern lifestyle. And while some debt can be instrumental, like for buying a home or funding education, the danger lies in ignoring or mismanaging it. Here's the narrative many fall prey to. I'll pay off that credit card next month, or I've got time to tackle those student loans. But as days turn to months and months to years, interest piles up, and that initial amount can balloon into an unimaginable monster. Dave Ramsey often discusses the psychological weight of debt. It's not just numbers on a piece of paper or a screen. It's the sleepless nights, the constant stress, and the nagging feeling of being chained down. The longer you ignore it, the heavier it gets. But it's not all doom and gloom. Recognizing and confronting your debt is half the battle. The next steps? Prioritize it. Create a payment plan. If you've got multiple debts, consider methods like the snowball, starting from the smallest debt, or the avalanche method, targeting the highest interest rate first. And crucially, while you're paying it off, avoid accumulating more. In a world that often encourages buy now, pay later, it's vital to remember, debt might offer temporary pleasure, but it can lead to long-term pain. It's time to face that financial ghost, tackle it head on, and reclaim your peace of mind. After all, financial freedom isn't just about earning. It's equally about wisely managing and eliminating what you owe. Bad habit number 4, no emergency fund, playing financial Russian roulette.
It's your rainy day fund for when stuff happens, not if stuff happens, because stuff is going to happen, and you better be ready.
Ready for a gut-punching fact? A recent report from the Federal Reserve highlighted that nearly 40% of American adults wouldn't be able to cover a $400 emergency without selling something or borrowing money. Let that sink in. A mere $400 unexpected expense could throw a significant portion of people into financial chaos. Life, as we know it, is full of surprises, and not all of them are the pleasant kind. Your car could break down, a sudden medical expense could arise, or heaven forbid, you might find yourself out of a job. These aren't far-fetched scenarios, but real possibilities in anyone's life. Skipping on an emergency fund is similar to playing financial Russian roulette. Without a safety net, you're one unexpected incident away from debt or financial distress. It's like sailing a boat without life jackets, hoping the sea remains calm. The wisdom of Dave Ramsey and many financial experts emphasize starting with a modest $1,000 emergency fund and gradually building it up to cover 3 to 6 months of living expenses. This fund isn't about generating wealth or returns, it's about security, a buffer against the unpredictable nature of life. Parking this fund in an easily accessible, low-risk account ensures that when life throws those curveballs, you're not scrambling, borrowing, or making rash decisions. Instead, you have the peace of knowing you're covered. In essence, an emergency fund isn't just money in the bank. It's insurance against life's uncertainties. It's the reassurance that, come what may, you have a financial cushion to land on. If you haven't started building yours, today might be the perfect day to get that ball rolling. Your future peace of mind is worth every penny saved. According to a Gallup poll, only 55% of Americans invest in the stock market. Now, while plunging all of your money into high-risk ventures isn't wise, being overly cautious can also eat away at your financial growth potential.
You sit down with someone that actually knows what the flip they're doing, they can help you put the cookies on a shelf where you can reach them. That's called a teacher. And you understand about mutual funds, and you understand about the track record on a mutual fund, and that's how I started investing.
Let's get real for a moment. The savings account you're proud of, with inflation, its value could actually be dwindling over time. There's comfort in sticking to what we know, like traditional savings or fixed deposits. The problem is that inflation typically exceeds the returns on these safe investments. Dave Ramsey and numerous financial aficionados emphasize the power of diversification. The goal isn't to chase the next big stock or get rich quick. It's about steady growth over time. Think mutual funds, bonds, or even real estate. By avoiding the world of investment altogether, you're not just missing out on potential profits. You're letting your hard-earned money lose its value. It's essential to strike a balance, educate yourself, start small, and most importantly, diversify. Remember, in the investment world, not taking a calculated risk is sometimes the riskiest move of all. Your future wealth deserves a strategy, not just a safe corner. Number 6. Keeping up with the Joneses, the silent wealth eroder. Here's a jaw-dropping fact from a CNBC report. Nearly 10% of people making $100,000 a year say they live paycheck to paycheck. So why is this happening? Even to those earning sizable incomes, one significant culprit? The pressure of keeping up with the Joneses. Social comparisons isn't just about ego or vanity. It's a genuine financial pitfall. When you're trying to match or surpass your peers in lifestyle, fashion, tech, or vacations, you're not only stretching your wallet, but often diving headlong into unnecessary debt. Dave Ramsey frequently discusses the illusion of wealth. Just because your neighbor has the latest car model doesn't mean they aren't drowning in car payments. That extravagant vacation someone posted on Instagram, it might be financed by credit cards with skyrocketing interest rates. It's crucial to understand that genuine wealth isn't always visible. It's in investments, savings, and most importantly, financial peace of mind. So the next time you feel the itch to upgrade solely because someone else did, pause and reflect. Your financial journey is uniquely yours. Make choices that suit your goals, not someone else's facade. After all, as Dave Ramsey says, if you live like no one else today, you can live like no one else tomorrow. Number 7, not continuously learning. The hidden wealth blocker. Here's an eye-opener from the National Endowment for Financial Education. Nearly 7 in 10 adults say they aren't very confident in their financial knowledge. Surprised? In the ever-evolving world of finance, what you don't know can hurt you. Dave Ramsey often stresses the importance of financial literacy. It's not just about earning and saving. It's about understanding money's behavior, from investment to taxes. Many people miss out on beneficial financial opportunities simply because they're unaware. Committing to ongoing financial education can radically transform your wealth trajectory. Whether it's reading books, attending workshops, or following trusted financial blogs, every bit of knowledge gained is an asset. In a nutshell, don't let what you don't know rob you of your financial potential. Invest in knowledge. It pays the best interest. These are 7 of Dave Ramsey's financial insights that have served as roadblocks for people. Money management isn't just about numbers. It's about mindset, discipline, and informed choices. Whether you're in debt, living paycheck to paycheck, or just looking to optimize your finances, recognizing and eliminating these pitfalls can be transformative. If you found this helpful, make sure you hit that like button, share with friends and family, and don't forget to subscribe for more financial wisdom. Here's to building a prosperous future, one smart decision at a time.